My purpose would be, let's get as much of your assets off the radar screen of the FAFSA as possible. Let's make sure that you're not taking distributions against these accounts, because the 529 plan, you'd want to take a distribution. You take a distribution against a life insurance policy, for example, meaning you do a loan against a policy. That's a loan. That's not a cash distribution. That's not taxable. So you can really maximize your opportunities there. It's not income. Exactly. Yeah. I hate to see the day when loans become income, which would collapse the economy. I don't think that day will ever realistically come.
Or become taxable, just in general. Not even if they just find a way to tax loans, instead of counting it as income, they just tax it. That would be disastrous too, because then who's going to want to get a loan?
Yeah, exactly. And imagine if these student loans were taxable upon receipt. Now, what'll happen if they're taxable? Would tuition go down to meet the taxable amount? I don't know. There's a whole ripple effect there. I didn't want to examine that.
Yeah, that would really screw everything up, and it would make it a whole different ball game. And you could go down probably 1,000 different rabbit trails trying to figure out what would happen, if something like that actually occurred.